Hi, I'm Ray Thomson, Chairman of the New Zealand Angel Association. In this presentation, I am covering the startup capital food chain. The traditional capital food chain defines an ecosystem occupied by three major players: friends and family, angels and VCs. The boundary between these players lies in terms of the deal size and the business stage. Friends, family and fools, as they're commonly known, are generally informal investors who provide capital as a gift, a loan, or for a small equity stake to enable a startup to invest in prototype development and market validation. Angels are often the first outside investors. We invest in a stage of the business cycle where the heaviest losses are being made. In this stage, known as the Valley of Death, sales are small or non-existent, customer acquisition costs are high, and the business is investing heavily in positioning itself for growth. VCs like Movac, Pioneer Capital and others in New Zealand invest in excess of $1.5 million in growth stage companies for around a 30% stake. They often require preference shares that rank in front of earlier investors. The funding space is changing, however, and new sources of capital are entering the startup space. Seed stage companies are seeing a growing variety of capital sources from accelerators, seed funds and crowdfunding. Accelerators like Lightning Lab in Wellington raise money from private investors to fund and incubate seed stage startups. Their strategy is to invest heavily in the top of the funnel and to invest further in select startups that are particularly promising. Seed funds, like the Global from Day One Seed Fund, are funds that invest specifically in seed stage startups. Like accelerators, they too build a pipeline for prospective follow-on investment by the associated angel networks or funds. Other faces in the startup capital food chain include super angels and angel funds. Super angels is a term for ultra-high net worth individuals who are typically former entrepreneurs. Super angels are known to write large checks, invest across a broad range of industries, and to make decisions more quickly than syndicates of investors and formalised funds. Angel funds like Sparkbox or Webfund in New Zealand apply venture capital methods to investing in angel stage businesses. So there you have it, the capital food chain. The good news in New Zealand is that thanks to the work done by groups like the New Zealand Angel Association, syndication is prevalent and increasing between both the regions and the various sources of capital. For more information on the capital food chain and on members of the New Zealand Angel Network, please refer to the New Zealand Angel Association website. Thank you.